Hello, folks. Brendan Chapman today from TheoTrade. It's July 21st. And boy, what a big day today in the market generally. What a big kind of euphoric. And as I think about this, are we seeing a sudden idea, kind of an original thought, original thinking? Or is what we're seeing in the market right now just a 2020 replay? And so as we look at the SPX, for example, we're up, we're back down. We just went through a 2-week period. The most bullish 2-week period every single year is following July 4th. And we can see from July 3rd to Friday's close, we're basically up 0.25%. Today we tried to rally, we faded, basically forming a tombstone doji, right? A bearish candle formation as we fade from the highs of the day. And gold is up 150%. And as we go through the periphery here, I've got my Ghost Prince industrial and technology, and SPCE up 11% today, right? We look at ABAT up 6%. These stocks have been on a tear. They've done this before, by the way, and we realize, and today, well, it's Open Door. Open Door was up 90% at one point today. We finished only up 42%. I say only because we faded from $4.97 at the high today. We faded back to $3.21. This market is fraught with speculation, right? And somehow that this is going to go on forever. Is Open Door going to change the whole dynamic of the market? I mean, if we go back to GameStop in 2020 and 2021, as the price was just going ballistic to the upside, and you talk to people that were participating in that, people that were advocating others to join the fray and get into GameStop, it was going to change and it was going to break the banks. It was going to change the dynamics forever until what? Where's GameStop trading today? We're trading at $24. And let's go back here to a 10-year weekly chart. The stock traded 120. At the time, people were talking the stock's going to trade at 1,000, right? Don't sell it. Diamond hands, HODL, hold on for dear life. You need to carry this because GameStop is going to change the world. Why? Because there was a lot of short interest in it. This is the reality of what we're seeing, right? Stocks with very high short interest are seeing rewards as who? As retailers or retail traders are piling into these companies. As institutional traders are hedging by buying calls, creating a gamma squeeze to a short squeeze. This is one of the principal things we look for in my program called Ghost Prince. We're looking for option activity leading potential moves in many of these stocks. Some like QuantumScape, for example, QS, or Plug recently. Massive moves in these companies, and yet, as we look at the percent change today and we look at QuantumScape, it's down 15%, was down over 20%. As we look at this, we can get caught up in the notion that somehow this time it's different. For those that have been around the market for a long time, you know that it's not different. It changes a little bit. And yes, the fervor to get into these companies and somehow price them at substantially higher valuations, like in Open, for example, is Open suddenly worth from 50 cents to $5? Is Open suddenly worth 10 times more today? The answer is, of course, no. And we've got earnings coming up, and they'll potentially give guidance and other information that may allow us to try to value a stock that doesn't make money. And these are non-GAAP earnings, by the way. So when we think about this, how do we value these kind of companies? You can't, right? Why are people trading it? Because they're expecting there's someone else out there that will buy the stock from them at a higher price. Are you prepared to sell? Is this suddenly going back to 2020? No, you don't sell. You hold on for dear life. Diamond hands, right? We can think back in this thought process that was really permeating the market in 2020 and 2021 was somehow that we're going back to our old financial advisors telling us, no, it's not timing the market, it's time in the market. Have investors suddenly shifted from hodl to now we're going to sell? Well, guess what? When they sell these kind of companies, this is exactly what happens. These are not diamond hands. They never were. People were not going to hold on for dear life. And the minute they lose confidence, they sell. And what do? They sell at market. They will sell at any price. And the issue today is, you were able to sell intraday. If we look at a one-day chart on open, you can see the way that it went up, right? We're kind of climbing the hill and boom, within a few minutes, the stock depreciated significantly. This is what the retail trader does. They buy at market and they sell at market. And especially they sell at market. When they lose confidence, they're out and they will sell at any price. This is exactly what happened to Opendoor today. Is this the type of strategy that you trust, where you could be down 15, 20, 50% the next day, or even intraday, you might lose 30 or 40% from its highs? This is a big deal. And so how do we address this kind of market? I talk about frequently how to trade these kind of stocks using options. Options frequently, these kind of companies are cheap. Spreads are cheap. And it allows you to control risk through rolling or taking profits. But you better have a plan to take profits into strength. Because just like today, you come close to touching $5 and you say, oh man, if it could just get above 5, I'm going to sell it. And the next 10 minutes later, you're at 321, 323, where we close today. Maybe even lower. This is the reality of the market right now. This is not an original thought to say this time it's different. This time people aren't going to sell. This time I can sell at a higher price. The reality is I can choose the high. I can hold this for a week or 2 weeks or a month or 3 months. Taking stocks that have already moved and then start to appreciate again, like a NEG, for example. Right? I mean, here's a company that went from 345 to 55. Was it suddenly worth that much more money? The answer is, of course, no. And at one point along the way, this company traded 10 million shares, over 10 times its float. Its float represents the total available shares that can trade in any given day. And that traded 10 times its float at 10 million shares that day. Let's take a look at Open today. Open traded what? Today, 1.8 million shares, 3 times its float. When you start to see the entire shares available that are a trade on any given day, and you're trading 3 times or 10 times or even 1 time, you're reaching a critical mass in terms of the appreciation of the stock. And guess what? You may sell early, but at least you can book your profits. Because I'll tell you what, I'm just going to use RGTI as an example right here, right? RGTI back here, you think, oh man, and I walked through all of the big call trades all the way up until right there. You saw a put trade materialize. We had another update or two, and then boom, the stock's down 50%. Well, from the high, we went from 21 down to 6. How do you take profit? You're not going to sell there when it opens up at 1271. You're probably not going to sell there at 10. And you're thinking, okay, if we can just get back to 12, I'm going to sell again. The stock goes to 16. You probably didn't sell there either. Maybe you sold as we ground it back down to 10, or maybe you never sold at all. But let's be honest. RGTI had a big breakout, a big short squeeze the other day. And guess what? RGTI, once the volume begins to drop off, could end up back at 2 again. This is the reality of these kinds of companies, right? You have ups and you have downs. You can have spikes, and then all of a sudden we start to reverse. Well, guess what? Today's a day where we saw a lot more companies going down on this list than companies going up. Yes, you have some that are taking off. I dabbled in space. I got out. I didn't keep going at it. We finally broke out. This happens, right? ABAT. Okay, we're seeing the big moves in these companies. Maybe RRs are ready to take off next. Google today up 2.7%. Nice move ahead of its earnings. But the point is this, we've got to have a balance. This is not a certainty that all these companies will go up in perpetuity. That, look, this is a new paradigm and that somehow evaluations don't matter. I remember in 1999, for a financial economics class as an economics major, writing about the idea and this notion of somehow there's a new paradigm where earnings don't matter. I provided a degree of skepticism. I was licensed, I was selling securities and going to school full time. And you see the euphoria of people buying. I have a professor saying people don't only buy for dividends, they don't buy for appreciation. There is no such thing as the greater fool theory, the idea that somebody buys with the intent of buying something they know is overvalued, thinking there's always going to be someone out there ready to buy it from them. The reality is this is not an original thought. This is only a replay of conditions we've seen historically time and time again. The way you trade the market, certainly using options, are one way to help reduce risk and still capture a degree of the upside, but having a plan to take profits into strength, not worrying about where the eventual high is going to be, because guess what? Nobody knows. And that eventual high may reach, and the next day you're down 50%, or even intraday, you're down 30% from that point. You will never be able to identify perfectly when to buy and at the lows and sell at the highs. A lot of people jump on with momentum, and guess what? Right now, margin debt. What does that mean? People borrowing money to buy stock is at levels we've not seen since 2020. I'm not saying you don't try to participate. I'm just saying that learn how to do it with controlled amounts of risk, or just buy fewer shares. The reality is, if you're attempting to get rich quick on these kinds of companies, you will eventually be disappointed. Yes, you're going to make some big moves on some of these companies. The reality is, eventually you're going to put that money back in the market at risk again, and you're going to see a 50% decline in a day. That's the reality on a stock. How much did you have invested? How concentrated are you? So the idea is certainly spreading around a little bit, dabbling in a few stocks, a few names, trying to participate on the upside to the degree you can. But the reality is, this is not the market you're going to get rich with unless somehow you pick the right stocks and you get out at the exact right time. The reality is 99% of the people aren't going to do that. They're going to continue to put it at risk. And so the point is, in my video today, is just, if you're finding yourself drifting towards the original thought that this can go on forever, it can. If you're wanting to take people to provide some degree of maybe just, trying to balance out the thought process a little bit, giving some history, and if you're taking that and taking it negatively, rather than saying, maybe I should consider taking some profits if I have a lot of these companies, because look, if the market makes a 5% pullback, you're going to see a 20, 30% decline pretty readily in these kinds of companies, right? Or more. And if you go back to what we saw back here in December, you're going to see the exact same, or January in here, when the market began to pop with a lot of these names, you're going to see the decline start to hit, right? The squeeze only lasts, it's an aberration. It lasts for a very short period of time, just like on SPCE. Virgin Galactic touched 66.66, and then boom, within a month, it's back down to 260. This is the reality for many of these companies. So again, original thinking or a 2020 replay, just remember, this is a 2020 replay, and 2020 was not the first time. It was one of many times in the recent past. Things change a little bit. Maybe dynamics change. Maybe we're not using the term hodl quite as much, or diamond hands quite as much at this point. But the reality, the risks still remain in these issues. And so again, there's ways to kind of identify potential moves in these kind of companies. There's a way to trade them using options. And again, that's something I try to do on a week-by-week basis in Ghost Prints. But again, having all of your principal out there in equity in these kinds of names does create a level of risk that most people aren't prepared for. So hopefully today just gives you a reminder of, this is only a replay of something we've seen time and time again. And it will catch you back next week on the video. Have a great one. Thank you.